Last week was a pullback, particularly in the sector of the technology stocks. As I see it, this is an opportunity, and that's what I think how you need to look at things like this. When the market turns and goes down, you need to look for opportunity. The first step to doing that is having control of your mind, and that is rather than looking at it as a panic situation and say, "Oh my God, I lost so much on my stocks." Say, where is the opportunity in this? How do you get there? Read my book about getting rid of that unwanted roommate in your head. I know what you're thinking. You've been brooding this whole weekend saying, "Oh my gosh, what's happening? I'm in the wrong place," and your roommate's been telling you to go for cover. No, this is an opportunity. So let me share with you what I'm going to do. I'm going to sell my Ericsson. I've got a profit in it. I'm going to sell my Biogen. I've got a profit in it. I'm going to sell my Abbott Laboratories. I'm about even on that. And I'm going to sell my EXP. Why am I doing that? I'm raising cash. I'm raising cash so that I can go and buy my primary stocks. My primary stocks are the stocks I want to die with. Okay? They're the stocks that I believe in the future are going to make me big money. Now, I recognize, and I read an article in the Wall Street Journal this weekend that said, yes, Exxon used to be the number one stock, the highest valued stock in the world. AT&T held that position longer than any other stock. Walmart held that position for 3 days. Read the article. It's very interesting. Their point is that Apple, Amazon, Microsoft, Facebook, Tesla will not always be the largest valued stocks in the world. They will not. They will be replaced. But within the next week, they will not be replaced. Within the next 5 years, I do not believe they will be replaced. So my strategy is for the next 5 years, that's who I want to own. And I have an opportunity starting on Tuesday this week to buy in cheap. Now, do I know if Amazon, Apple, Microsoft, Facebook, Tesla, Google are going to go up or down? I don't have any idea. That is going to be controlled by fear. It's going to be controlled by algorithms and computer buying and what the majority of you do the first thing on Tuesday morning. But what I'm going to be doing is selling my Ericsson, my Biogen, my Abbott Laboratories, and my EXP. And I'm going to be taking that money and I'm going to be watching. And let me give you some specific points I'm watching. I track these stocks on a chart, and I create what I call a buyer's channel, a buying channel. On the high side, I see a channel in which they trade. On the low side, I see a low in which they trade. Every once in a while, they will get out of that channel. If you'll look at these stocks, many of them broke the high side of the channel several weeks ago and have dropped down substantially into the channel and in some cases below the channel. Amazon is below the channel. It closed below the channel. It got as low as $3,111. That would be a tremendous buying point. If I on Monday or Tuesday or Wednesday can buy Amazon in or around $3,111, I'm a buyer. Apple got as low as $110. They dropped on the daily basis out of the channel. They closed above it. If I can buy it again, and I did buy some last week at 110, I'll buy more. Microsoft got as low as 205. Again, dropped below the channel, but closed within the channel. If they get down around 205, I'm a buyer. Facebook got as low as 271. At 266, it is out of its channel. So I'll be watching Facebook, and I'll if I see it go below that, that's where I'll buy it. Tesla needs to go below $355 now, and Square needs to go below 134. Do I have enough money to make purchases in all of these? No, I don't. I did not have enough in my Ericsson, Biogen, Abbott, and EXP. So I'm watching these 1, 2, 3, 4, 5, 6 stocks to see which one of them gives me the best buying opportunity. Once that happens, I move my cash into those stocks. Now, what do I do? First of all, I'm very conscious of capital gains. I'm hoping, and in this case, some Ericsson, Biogen, Abbott Labs, and EXP, most of them are in my qualified accounts. So I don't have any concerns of capital gains. But I also have some of them in my non-qualified accounts. So I will trigger some short-term capital gains. I'll look at my portfolio, though, from January 1st and see if I have any capital losses that I have taken. If I do, that the capital loss that I took earlier this year negates any capital gain that I might make this year. So it's a wash, and I'm good with it. At the same time, I like the opportunity. I'll probably take the capital gains and then possibly negate them later in the year, or just go ahead and pay the taxes. If I'm making enough money, it's okay. In my case, I can raise the money because I have to take a required minimum distribution out of my qualified account, which will give me the money to pay the taxes. But that's more about my situation, not yours. Okay. The primary, now, what do I do in the future? Okay, I still like Biogen. Biogen is working on a drug for Alzheimer's. It's something that I'm very conscious of. I'm very aware of. I have friends that are going in this direction. So I want to get back in it. But I like Abbott Labs. I like the growth cycle they've had. Ericsson, I'm not getting real excited anymore about 5G. I just think there are other opportunities in artificial intelligence, 3D printing, machine learning, cloud computing that are going to dwarf 5G installers. Those people who build the systems, the Ericssons, the Qualcomms, the AT&Ts, and the T-Mobiles and people like that. I think that's a secondary thing that's going to happen over the next 5 years. The primary thing is going to be the reaction to the coronavirus, the resetting of our world economies as a result of the coronavirus, the resetting of our healthcare system, the resetting of our education system, the resetting of our entertainment and sports and movies and all this. And this is all going to be driven by the people who have the data, who own the technology, and have the smartest brains in the world. And they are in the big six. Truly, they are, and that's not fair, they are in the big nine. These are the people who own the best of the data and the minds of the world, and are going to be what is going to drive our economy for the next 5 years. I don't know beyond that. I really don't care. I'll work on the next 5 years. And I think that's where you need to focus. Now, again, I think I need to emphasize here, we have an opportunity. Should you get back and at some point and say, well, I'm interested in Nikola, or I'm interested in Workhorse, or I'm interested in Plug Power, or I'm interested in Zoom. Yeah. But today, this week, your opportunities are to raise cash and take advantage of the downturn in our big six. And it may come back to you and say, wow, I got that bounce back up in 6 days, in 10 days, in 20 days, but you're going to get that bounce back up. So this is where the opportunity is. This is what Best of Us Investors is all about. Understanding the world we live in, understanding who's controlling that world, and then taking opportunities about it. I am the chief of the tribe, okay? I come before you every day with a video. I share with you my readings every morning through my morning letter. And if you are not a part of the tribe, go to bestofusinvestors.com, sign up, give us your name and your email address. That will put you on my mailing list, and you will get something from me every morning that the stock market is open, and we will share in there the news as well as some of the emails that I get that share knowledge, and then it will also give you a link to our Discord. Our Discord is the tribe's village. This is where the tribe members gather and share their information, share their concerns, and we try to grow together. So go to the Best of Us Investors, then you will get my morning letter, then you will get your invitation to join the tribe at the village through the Discord. So I think this is a wonderful opportunity. I think this is going to be an exciting week. Make your trades. Don't be upset if, in fact, these stocks even go further down, because this is an adjustment. This, as I told you, mutual funds and ETFs are balancing at this point. Computer trading is at its extreme best in markets like this. So don't let that roommate tell you you did the wrong thing. You are investing based on opportunity, and this week is a week of opportunity.